What's up, traders? Welcome to this week's episode of the Weekly Watch List, where I do a technical analysis and give you my thoughts on the tickers listed up above. We'll of course be checking in on our broad market. We've got our core list of companies that we're always watching, and this week I've got 10 additional trade ideas to share with you towards the end of the video, so definitely stay tuned for that. I'd say about half of them did come from Discord members, so if you want to chat with myself and other great traders in real time, definitely check out the links down below in the description. The Discord is there among many other things, and without further ado, let's jump right into the charts. So kicking things off on our SPY weekly chart, talking about candle structure and location as always. For structure, we have a solid green-bodied candle indicating that the buyers stepped up off the lows, carried it throughout the course of the week, and closed it literally right on the highs. You can see there's no upper wick on this week's bar. Of course, we can read into the lower wick as well a little bit. The sellers tried to take control here, but obviously the buying pressure outweighed that of the sellers. So from a structural perspective, things check out for the bulls. And yes, don't get me wrong, we will address the gap from the daily time frame, which is really comprising a majority of the weekly bar here. So still bullish from a structural perspective. From a location perspective, we have a low and now we have a higher low. That's bullish. We also have a high and a higher high. So that, of course, is also bullish. So from a structural and location standpoint, the bulls go 2 for 2, closing at a nice spot here. If we look at volume down below as well, I would say it was better than average than what we saw during this sort of grind higher in the October/November part of the market. So that also checks out, maybe a smaller check though, for the buying pressure, okay? The other thing I would point out about this is that we've literally closed right on this bit of a pressure cooker top, close to about 470.50-ish, 470 quarter area in our marketplace, which again checks out for potential for a breakout into blue sky territories. Let's go ahead and scrunch up the chart, zoom out a bit here, and go ahead and draw in our support trend lines just to be aware of where they're at. We've been talking about these for forever, basically. Here's your trend channel. I would say that based on the location of the weekly chart here, based on the structure that we put in and everything we just talked about, wouldn't be out of the question for the upper end of the trend channel to be in play into this upcoming week. There's a couple of things that might throw a wrench into that. We'll discuss some of them on the SPY Daily, but more importantly, some more nuances as we get to the IWM, if you can believe it or not. And then what else do we have for trends here? So if we come in from this low, we talked about this last week. Obviously, this trend line was never touched. And if we come out to the swing low from here, the sickness round, then do something like this to the October low, that trend line was defended, right? We obviously got the bounce and closed stronger in this past week of trade. So from the weekly perspective, things do check out for the buyers remaining in control, taking back control from the healthy pullback, and potentially a new higher high on the table. Let's drill down to the daily now and talk about the first nuance which could throw a wrench in everything that we've just sort of discussed. So on Wednesday, if I just drag over the economic calendar here, what you'll notice is that on 2 p.m. or at 2 p.m. rather, we have the FOMC projections, the statement, the Fed funds rate, and then the press conference, the infamous press conference where Jerome Powell will be peppered with questions live on what he thinks about inflation, right? What's going on with the employment situation? Does he think that the taper will be able to be wrapped up sooner than expected, indicating that rates could be raised sooner than expected? And what's the deal with the rates? Are they going to rise faster than expected? So all of those should be on the docket for the 2:30 session there. And again, that could throw a wrench in any analysis that we do here. It seems that the market already knows that inflation's kind of, out of control. It's no surprise to anyone there. It's also no surprise that the taper will be wrapping up sooner than expected. Jerome Powell has retired the word, quote unquote, retired the word transitory, and inflation's a little bit more of a big deal, right? The market knows this. So if things are on par with the expectation or better than the expectation, I would watch for the breakout up and over 470.40 to get us to the all-time high. And then after that, the resistance trend line from the trend channel, which we discussed on the weekly. And depending on time of week, that could be anywhere from about 480. And then after that, our next target would sort of be, let's say it's later on in the week, sort of 481.50. A fairly aggressive target, but with the right sort of catalyst out there, aka Fed meeting, I wouldn't write it off, okay? Let's talk about downside, right? If the market does not like what it hears on Wednesday, then what are we in store for? Well, the first precursor, level that we have on the charts is 466.30. We remember the importance of that from the Tuesday gap up. It was the pullback low. From there, it held as the low of Wednesday, low of Thursday, low of Friday. So that level is very, very nuanced. If it's broken down, we essentially have very poor structure until the gap fills to about 460.82. Again, if the market does not like what it hears on Wednesday, that would be my first thought. The gap underneath us could be in play. Anything beyond that, it's all about the 50 SMA, and do we catch ourselves for a higher low? So let's say we start printing hammer candles here. Is this going to be a higher low from this sort of panic that we saw in late November, early December? That is ultimately the question here in the S&P. And with the Fed coming out on Wednesday, again, it's going to throw a wrench in whatever sort of directional analysis we do here. We know the weekly looks good for higher. We know the daily looks good for higher. You could start to look at this as a bit of a daily bull flag, correct? Something like this. Boom, breakout takes us higher. It looks bullish, but do keep in mind that the Fed coming out on Wednesday could throw a wrench in everything we've just said. That's why we're prepared with some levels. So let's continue on here and talk about our QQQ. And zooming in a little bit on this one, let's switch tools to do that. Zooming in, what you'll notice is that just like in the S&P, we have a clean breakout point right here at 400, the round number, but our all-time high is slightly overhead, or higher overhead rather. So in that sense, a little bit of relative weakness. We also know that the QQQ will be especially sensitive to what happens on the Wednesday sort of announcement. We know that rates impact our tech sector dramatically, right? So keep that in mind as well, that this could see a magnified move compared to what we see in the S&P 500. What else are we seeing here in the QQQ? Well, our precursor level here at the 396 quarter that we discussed on Wednesday in the midweek market update, it was obviously violated, but the top of the gap is still holding. So in this instance, the QQQ is actually a little bit weaker than what we saw in the SPY. Don't get me wrong, we still have a hammer candle on Friday, and this breakout point is still sort of screaming, if it goes, watch out for higher, all-time high kind of inbound. To the downside, it's all about the gap. We don't have that precursor level. We discussed how it's already been violated. So underneath 393.05, call it 393 even, you're looking for 387.68, the bottom of the gap. And the difference here is that unlike what we have in the SPY, we have this level, which is also a big support underneath us. It was the break and retest level that held at the 50 SMA. It's this level from in the past. Remember that the SPY did not hold this area. So even if it were to come down a little bit lower into this area, basically the 382.34 that we just discussed, I would say it's still okay in the QQQ. However, you really don't want to go underneath that. If we do, it starts to change the daily trend to much more firmly down, right? We would have this, we would have lower high, we would have low, and if it breaks, right, we would just give ourselves a lower low, indicating a short-term downtrend here on the daily time frame, which is what we would, ideally like to avoid if we're bullish on the marketplace, right? So that's what I'm seeing here. Again, a little bit different than in the SPY, but overall, Wednesday could throw a wrench in things. Those are the levels I'll be watching out for. The structure as of right now, just like in the S&P, does look fairly bullish with the hold of the big gap up. Let's move into the IWM and talk about some of the more nuanced things in the marketplace that maybe aren't so obvious to what first meets the eye, right? So here we go. There's the range we've always been discussing. We're smack in the midpoint once again at around this 219, 220-ish area. That's screaming neutral risk, right? This here was sort of a red flag that, hey, it's actually not a big risk-on environment. There's your red flag, if you will, right? So no longer a risk-on environment. This was a failed breakout. We know that that's not the greatest thing for the marketplace. What else is not the greatest thing for the marketplace? Well, there's a couple of things that I have in the back of my head, at least, for the QQQ and the SPY. The first thing would be that as I'm scanning the market every week, coming up for, weekly trade ideas, daily trade ideas, the Wednesday trade ideas, all of that stuff, what I'm noticing is that a lot of stocks are actually, their charts are absolutely hideous. They're either in the middle of the range, they're at the low end of the yearly range, or there's just no clear higher low pullbacks. It's kind of smack in the middle. It's towards the lower third. Things just are not looking great in a lot of the companies that we scan the broader marketplace for. So what does that mean? Well, it means that what's driving the market right now is your Apple, it's your Tesla, it's your Microsoft, it's Google, which we don't have on our list here, and even NVIDIA is keeping things propped up, the fact that it's going sideways at its all-time highs, essentially. Now, this is not a bearish call to say that the marketplace will ultimately crumble if all of these things start to pull back, but it is to say that, hey, the general health of the marketplace right now, it's not like tip-top, perfect condition. We're just going to scream along for another 100 points to the upside. Now, could that happen? Yes. But ultimately, it's just a select handful of companies which are really driving the marketplace. You can even see this in the sectors. If we go ahead and expand this a little bit, what you'll notice is if we actually, so we're going to sort that from the other way. Your XLK, the tech sector, is still at the top of the list, but XLP for consumer staples is really, not something that you want to see at the top of the list. That's your things like Walmart. It's your things like Costco. Costco, things that people need to survive on a day-to-day basis, right? Your XLF should be at the top of the list if everything's swimmingly going along in the marketplace, but it's not. Utilities is above financials, right? So all things considered, a couple of signs out there that maybe the marketplace isn't as healthy as we think. Another thing we can look at real quick, and we'll sort of leave it off at this, is the SPX A200R, okay? And what this is the percentage of companies above or below their 200 SMA on the daily time frame, right? And as of right now, it's around 0.67. So sure, it's greater than half. However, note the trend here. A majority of companies are falling below their 200 SMA, whereas, back in here, things were all fine and dandy. I mean, 96% above the 200 SMA, that checks out as a bullish environment. But as this tapers off, and again, I want to be abundantly clear, this isn't a bearish call. It's just something to take note of in the back of your head that the marketplace is being driven by just a handful of companies here. So in your S&Ps, don't be surprised that if Apple slows down eventually, we might not make it to the top of the trend channel. If Tesla breaks down under 1,000, we might not make it to the top of the trend channel. If Microsoft pulls back off of its all-time high, we might not make it to the top of the trend channel. So that's a grander outlook in the marketplace. I don't want to get too fundamental. That's not really my MO, but I did want to bring it up again based on what I'm seeing every time I go to scan the marketplace over the past couple of weeks. Small concerns, but ultimately we have to go off the technicals. If we get the break here, we're going to go with it, right? So keep all of that stuff in mind. Let's get into our companies. If you've made it to this point in the video, I'm sure you're enjoying the analysis. Hit the thumbs up button and subscribe to the channel so you know every single time a new video comes out. Kicking off our companies here with Apple. This, of course, is one of the handful that is keeping the market sort of propped up, if you will. And what I want to point out is that this thing is just an absolute monster, making a quote-unquote moonshot. I use that term very sarcastically here over the past week, okay? So now is not really the time to be chasing this to the long side. If you missed it, I would say wait, be patient, don't really chase it here. But it's also not an ideal scenario to start fishing for shorts to catch the pullback. You're just sort of trying to catch a reverse falling knife, if you will. Because the trend is so strong, because there's so much relative strength, I just really don't feel like it makes sense to try to time the pullback because if you're wrong, obviously it's going to sting. We do have a secondary support trend line that you can draw into place here, something like this. Generally speaking, support trend lines are not ones that should hold forever, but if we get an aggressive pullback in Apple, I would certainly have it on my radar as a potential buying opportunity, noting that we did make a higher high, right? So we can afford to have a higher low pullback. The support trend line would be one area where that could come into play. Now, we also have some other areas underneath us. Notably, we have the 173.86 coming from this shelf of support. If we were to go over to a 30-minute time frame chart, you can see that right in here. So that's the first area to watch out for. Back over to the daily, what you'll notice is the prior one is the all-time high from in the past, so 170.29, and then underneath that, it's the breakout point. So again, I wouldn't really be trying to short into these areas and looking for things like this. Instead, I would watch for buying opportunities at these pullback areas, noting the extreme relative strength here inside of Apple. Next up, we'll move over to Netflix, which is kind of on the opposite side of the spectrum, extreme relative weakness, okay? And what we'll note here is that we talked all about those two-day highs in the prior video, and that if we took them out, maybe there's a potential for, again, use this word very lightly on the channel here, short squeeze, right? Added buying pressure to take us into the back test of 640 quarter. It simply didn't happen. Sure, we got the break and actually a daily hold above, but it didn't materialize into anything. For me, this is starting to turn into a daily bear flag. Any breakdowns of this support, so a new lower low here, should bring us to the low of the flag. That's at 594.20. Anything underneath, you're looking at this shelf of support at 576.45, and then really the daily 200 SMA, which is slightly above the prior breakout point, right? Reminder that this level is very, very significant here at the 554 based on the bearish nature, right? If we were to sort of project what the reasonable target could be from this pattern, generally what you do is you extend the flagpole length from the top of the flag consolidation, and it brings us to about the 576. But if the overall market doesn't like what it hears on Wednesday, and again, this is not a bearish call, I'm just saying if that is the scenario, then it wouldn't be unreasonable for this to be in play on Netflix. Is it a likely scenario? I would say it's probably not the most likely, but again, based on what we just discussed, that's what I'm seeing here. If there's any further upside movement, I would really just chop it up to that, exactly chop, looking for continued bear flag consolidation. Things only change now for the bullish case in my estimation if we can recapture 640.28 and get back above the neckline breakdown point from this double top in here. So Netflix not looking like the best chart here. Let's move along to Tesla. Again, one of the few that is propping up our S&P 500. As we've discussed over on the secondary channel, we've talked about this stock in depth there. The move into 1,000 this time around is not as attractive. Sure, we did print a hammer candle. Sure, we do have a higher low. Sure, we're defending the 50 SMA. But remember that we're testing 1,000 in a short proximity of time and off of a dramatic lower high from what we had from the resistance trend line. Now, Tesla is Tesla and it will do what Tesla wants to do, but I would say that the only way to get involved in this to the long side, or more significantly to the long side, is on a recapture of 1065. If we can get back above that, then sure, there's probably the chance we retest the resistance trend line. But if that doesn't happen, I would just look for continued chop in here. And remembering that, again, FOMC on Wednesday rates tech company here, anything that it doesn't like, maybe we come back down lower into the support trend line. That would be here around 950. And then after that, it's all about 900, 910. That general area does start to become attractive on pullback buys, noting that we would be filling the gap. And, it's the prior all-time high, right? So that's off the screen right now, but that is an extreme area of interest here inside of Tesla. Again, it's not to say that it can't go higher earlier on in the week. We do have the hammer, we do have the higher low, we do have the 50 SMA hold, but maybe it's just a scalp, right, on the breakout up and over 1025 to get us to the back test of the 1065, okay? So that's really what I'm seeing here. I would start to be careful on any subsequent tests or moves back down underneath 1,000 in Tesla. Let's continue on and talk about Alibaba. This one, I did sort of forewarn you that although it seems like it's the end of the world here, it's not just an automatic short, right? We obviously broke out above that resistance trend line and we moved right into that 130 area of resistance. Now that we've done that, we have the break retest. Is it time for lower again? Maybe, right? Obviously, it's in an overwhelming downtrend on the daily, so we don't want to fight that. But I would wait for some more confirmation. We have a flush point, which is being developed. If we go ahead and switch tools here. So breakdowns underneath about 122.50, and we can also remove that resistance trend line, do start to bring us lower, right? We're looking at that 119, 120, and then underneath, it's just back down to the lows. Remember that there's very poor structure from that Monday breakout there as it rebounded off of all of this sort of oversold, quote unquote, selling. So Alibaba, not the prettiest chart, but we have levels to get involved. If it is short, it's underneath 122.50. If it's long, it's probably got to recapture 130, and then we can start looking at 139, 140-ish coming from this pivot low here. But as of right now, be skeptical of upside in Alibaba. Let's continue on and look at Facebook. Facebook is also fairly bearish, noting that we're actually in a downtrend now. So here's our high, here's our lower high, here's our low, here's our lower low. So confirmed daily downtrend in Facebook, although the past week was almost straight up, and we are getting a bit of bull flag consolidation here in the tangled up moving averages. Remember, the blue is the 50, the green is the 200. As of right now, it's not firmly been resolved. We tried to move higher. Now we've sort of closed on it on the Friday session. I would start to think of this area right here as the must hold one at the 327, give or take, although we do have the shoulder marks from in here from the now failed inverted head and shoulders. So I'd just start to treat this as a zone of support. Really, things probably get nasty underneath 323, but your advanced heads up, that sort of intermediate level, would be that 327 we just discussed. Any further consolidation here probably sets up a move for the break and move into 338. And as we've talked about in the past, that's not the move. I take it back. I don't want to get ahead of myself. That would bring us into the resistance trend line. The move I was thinking of was this one, which we've talked about in the past. Not in play, obviously. We're well underneath. But the break of 338 could be interesting if it coincides with the resistance trend line, right? When you have two things breaking at the same time, generally that's a little bit more powerful. You should move to that next daily target. We have 351.52. Again, keep in mind Wednesday, the rates, if everything's bearish in the marketplace, obviously you're looking at Facebook being one of those stocks in a downtrend already, probably resisting at the resistance trend line, correct? In that case, we talked about downside targets. Ultimately, underneath that, let's go ahead and remove that now. It's all about these lows close to 310. So that's Facebook in a nutshell. Not looking fantastic, but maybe if we get some good news out of the FOMC and break this, maybe there's a trade there. Maybe, but it would have to be sort of in a perfect storm, right? Let's move along and talk about NVIDIA. This, again, is one of those handfuls of companies keeping the market up at the highs in my estimation. If you look at what's going on here, sort of falling back down out of this range after getting back in, again, closing back down underneath, I would just start to think about this as the overall range. I mean, it's not perfectly respecting this one versus this one anymore. So again, just think of it as an overall range. We'll go ahead and put that box back on. Whenever we're at the 50% mark, which don't get me wrong, we're underneath it as of now, but generally speaking, your opportunity does not exist here. It's really at the edges for either breakout or mean reversion, and down at the bottom for mean reversion or a breakdown. As of right now, just not seeing it in NVIDIA, I will still maintain that the breakdown point is here, the low end of the range at the 287.50 for the 50 SMA touch, gap fill underneath. Anything underneath starts getting a little bit nastier into 250. Not seeing it as a likely scenario just yet, but something that you can keep an eye on inside of NVIDIA at least is this resistance trend line, right? If we come in from the highs, do something like this, you can clearly see that we're getting knocked down for lower highs, one after another here. So if that starts to change, maybe there's a break of the resistance trend line to take us to the top of the range, 330, 345, 330, 350, and then the all-time high, right? That would be your sort of precursor mark where, okay, trend could potentially shift here if we're getting back up above that resistance trend line. Overall, direction is not abundantly clear, very choppy here in NVIDIA, but again, things don't get bearish until we break down firmly underneath 287.50. Let's move along and talk about Microsoft, another one that's really keeping the market up at the highs. Obviously, good relative strength here as well, looking more like your QQQ chart as opposed to something like Netflix or Facebook, right? I mean, you can see clearly here, there's that breakout point. We took it on the Friday session and closed relatively strong, right? Obviously a green close there on solid volume down below. You're looking for continuation into the all-time high and then potentially blue sky territories after that. If it were to fail this breakout, what you would see would be something like this back down underneath the breakout point, 338, okay? So there's a couple of scenarios to watch for here. We get the break, retest, and go. So if we hold at 338, that of course would be bullish. Be on the lookout for hammer candles that print around this area, indecision doji candles, things that would make you, question the strength of the sellers. Is it just simply a break and retest? 338 is the number to watch. Flip long over these highs. Again, all-time high would be the target after that. Or the bear case would be the look above and fail back down into this overall range right here. We know that the target should be the bottom end at 330. So Microsoft actually looking fairly attractive for a risk-friendly setup here. Maybe it doesn't happen exactly like we've just outlined here, but that's essentially the framework you would apply to a situation like this. Anything underneath 330, it's all about the 50 SMA and potentially saving us for a higher low, right? This is our current set of lows. If it saves us for a higher low, that would be a good thing, but if it goes, obviously it's all about the gap underneath. 316, we'll call it for round number's sake, down to 312.50 inside of Microsoft. Next and lastly, let's talk about the beast, Amazon here. And again, this is sort of what I was talking about when I was scanning the broader marketplace and not really finding attractive charts. I mean, look at this, still stuck smack in the middle of the range. You would think Amazon's kind of like the holy grail of tech companies. You have AWS, you have their sales services. I mean, you have everything, and it's just in the middle of the range. It really hasn't done anything over the past, however many months this is, 6 months, 7 months, 8 months, whatever. It's just still smack in the middle of the range. So sure, it's kind of making progress off of these lows, but it's still dramatically underneath the highs, right? So that's sort of what I'm seeing and what I was referencing as I was talking about scanning the marketplace here. We are at a critical juncture, so if I zoom in a little bit more, what you'll notice is that technically speaking, we do have higher lows forming, so here are your higher lows. It's all about Friday's low. Does it hold or does it not? We're back above the support trend line. We're back above the 50 SMA. If it holds, fine. Look for a retracement probably into these highs where we did struggle for a majority of the week. Let's throw that on as a target. And that level is going to be here around 35.40. We'll call it for round number's sake. After that, it's all about the shoulders, right, from the head and shoulders pattern at 35.85, okay? So there's a substantial amount of overhead resistance here. This is also going to be a very choppy zone in the chart. I'm not anticipating that it just moves through there cleanly, but we do have the higher lows, right, which is sort of building the bullish case back above the 50 SMA, back above the support trend line. If all of that starts to go, and don't get me wrong, the Friday close here was relatively weak on some pretty strong volume as well. It's all about the lows here, right? Can we hold for an equal low and potentially bounce out of that? And if, that sets up, what did I just draw, right? Double bottom. Technically, your neckline is much higher, so there's a lot more work to be done. But if it does not hold up as a double bottom or an equal low here, we know that the target's probably coming back down to about 31.76, noting that this is so close to this. Again, you would expect a more significant lower low in that instance, and that would be the target, 31.76. Hit the thumbs up button, subscribe to the channel, hit the bell, all that good stuff YouTube tells us to tell you guys. And the first trade idea here is going to be on Ford. I mean, just obviously a picture-perfect bull flag on the daily, breaking out huge on Friday. Good volume supporting the move there. A couple of scenarios, kind of just like Microsoft, if you will. Obviously, you get upside continuation. That's the most bullish scenario. The second most would be a break retest, holding on to 2050 as support, looking for hammer candles down here, anything that would indicate a reversal for a move back higher. That's sort of scenario number two. And then obviously, if it fails back down underneath, which I'm not expecting based on the position of this candle, based on the volume down below as well. Anything underneath that, you're looking for the low end of the range here at 1923. Again, it does look like a very bullish setup here. If we quickly flip over to the 30-minute, what you'll notice is that during all points of the day, it was basically flag after flag after flag closing literally right at the all-time highs, and also volume was ramping up throughout the course of the day, not tapering off. So the chart's incredibly bullish here, looking for some more upside and forward after maybe some healthy consolidation. AMD is up next. This one's sort of on my radar, but it needs to do something interesting here. What I've noted is that we have this and lower high here, and we're coming into this horizontal area of support. That's not usually a buy once you've made a lower high. Generally, this is an H pattern. You look for a breakdown, and if it wants to come into the primary support trend line, so zooming out the chart so you can see that, anchor down here, touch number one, touch number two. If it wants to come down a little bit further over the course of time into this prior high, congestion lows from in here as well, 120 is on my radar for AMD. So it's not a trade setup immediately here. It's also not a short call inside of AMD, but if it does move lower over time, 120 is on my radar as a buy point inside of AMD. Next up, we have JP Morgan. This one's on our radar not only because we have the FOMC on Wednesday, but look at this range, right? If you look at this, obviously whenever we're dealing with ranges, we know that opportunity exists at the top or the bottom. Right now, we're kind of more skewed to the bottom, but we know that we also have rules in regards to ranges, right? So if we do something like this, a perfect doubling of the range to the upside brings us into a technical target, and a perfect doubling of the range to the downside also brings us to a technical target. So regardless of which way this one wants to move outside of its sort of balance in here, we have a target in play. So that upside would be up and over 163.25, brings us to 168.70. To the downside underneath 158.37 brings us here to about 153 even. So JP Morgan watching for this balance to resolve itself one way or another. Obviously, financials have been lagging a little bit, so I wouldn't be surprised if the move is lower, but we're willing to play it in either direction, noting we are sort of supporting at that daily 200 SMA. Wouldn't be surprised if overall, again, you get something like this, maybe it starts pushing up against there, boom, breakout does take you higher. Again, financials are lagging, so I would sort of be, privy to the downside, but again, willing to go either way here in JP Morgan. Next up is Marvel. This one was from the Discord, most certainly. Thank you for our member there. And this one is a nice bull flag here on the daily time frame, certainly testing the low end, but it's right at the highs of the earnings gap up. So as of right now, things are checking out for bullish consolidation. Obviously, move up and over 92.81 puts it to play blue sky territories. Do keep in mind, this is a tech company. FOMC on Wednesday, we've sort of hammered this point home, could be affected greatly. Okay, if it does start to break down underneath the flag lows, really not interested until it either comes in and supports once again at the low of the sort of gap up here, 80.45, or being patient, waiting for the gap to potentially fill down here. Again, it's not a short call, but I just wouldn't be interested in longs if we're underneath 88.44. Next up, we have eBay. This one is a sort of bear flag. Okay, so looking at this as a bearish pattern happening underneath the daily 200 SMA, the green line, a breakdown of 66 even should start to get us into some of these other targets down below. So scrunching up the chart so you can see where they're coming from. This is more of a zone, right? If you look at this as sort of support from in here, break, retest, hold, or you look at this as your potential breakout point ultimately at 62.16, that's just sort of the general target here inside of eBay if the bear flag plays out. And just like we did in Netflix here, stacking the flagpole from the high of the consolidation would seem reasonable based on an expected move out of this pattern here. Obviously not interested in shorts if it takes out the top, and if it does, and you're so inclined to flip long, let's say the entire broad market screaming hot to the upside, your target would be here, $71 give or take inside of eBay on the failed breakdown of the bear flag here. Next up is Kraft Heinz, and this of course is more of one of those value companies, right? Fundamental plays instead of a hot tech company. What I like about this is the double bottom, right? So there's your two touches. Obviously, our second touch is already a higher low. The neckline's way up here at 34.60. If it gets taken out, you're looking at this gap to be the first target, so 35.34 up to 35.62. Next target, 50 SMA blue line and the bottom of this next gap. So two overhead gaps are going to act as your targets, but ultimately looking at this as a double bottom pattern. Does not have to happen immediately, doesn't just have to do something like this. What could happen is a little bit of digestion here. Obviously, you would want to be putting in higher lows and then a breakout over the course of time. Not interested in the trade if it never gets up and over the neckline or it exhibits just massive sideways activity inside of this range, 34.60 down to 33 even. Next up, we have Johnson & Johnson. Again, another sort of fundamental value play instead of a growth tech company, right? Looking at this, it's the same thing, but on a larger scale. Here's your double bottom, boom, something like that. Big breakout point here at 166.25 if it gets taken out. Next target would be here from the prior swing highs and also support from in here at 172, give or take. From there, monitor for continuation. Yes, you have this target here, all-time high. Asking a little bit much, right? Obviously, if the broader marketplace is not doing so well, I wouldn't push it here. I would look for, maybe some scalps into this range at first, hold a piece as a swing to maybe get us into that target 171.71. But ultimately, it could cool off, give us some consolidation, just like we just discussed inside of Kraft, right? Something like this would be acceptable. Any sort of break back above checks out for the move higher. Ultimately, you don't want to see it back down underneath 162.44. Next up, we have TJX for TJ companies. I believe that's what they're called, TJ Maxx companies. I don't know. Regardless, you get this, again, sort of bull flag, more like what we saw in Marvel, obviously not at all-time highs though, but really high and tight consolidation here. If it takes the top of the flag, looking at this high here, 77 even as your target, and anything underneath 73.85-ish area, not interested in the trade, right? Really don't want to get involved in this choppy area in here. So ideally, it holds up for healthy consolidation and boom, gives us the break. Looks like a very strong close on Friday. So watching this one closely up and over 74.75, call it 75 even if you like nice round numbers. Next up, we have Aflac, another great recommendation from a Discord member here. Zooming in, or sort of actually zooming out so you can see that big ascending triangle. This one's been on our radar for a while, this breakout point here at the 57.60, and on Friday we actually closed the first daily candle above. So we get a little bit of a doji here. It is after a pretty expansive move, so I wouldn't be surprised to see it go sideways for a little bit, but as long as we resolve this to the upside, we close daily candles above, look for moves into blue sky territories, right? So up and over 58 starts to bring into play $1.5 intraday levels that do form. Obviously, you don't want to see it back down underneath that 57.58. That would sort of be a big failed breakout of this ascending triangle. Next and lastly, we have a bearish trade idea on apps. And again, this just goes to show what's going on with some of the tech companies. I mean, look at this as a range. We're smack at the lows. So all things considered, not the best location here. Obviously, we had a 100% retracement. When that happens, it's very rare that you just continue on and get immediate continuation. Generally, you get a little bit of a dead cat bounce. That's what I'm sort of chalking this move up to right here. So looking for shorts to fill the gap underneath us, underneath 52.75, give or take, to fill the gap to the high of what would that have been Monday at $50 even. Anything under 50 can continue to get nasty here inside of Digital Turbine. Not interested in the trade if it never gets into the gap, or if it just wants to chop around in this, again, would really indicate that we might be getting more price acceptance higher as opposed to just a dead cat bounce. So the more time it spends above the gap, the least or less attractive the trade does become. That's really going to wrap up our trade ideas and the entire video. If you enjoyed it today or learned anything new, let me know in the comments section or by giving the video a thumbs up. Don't forget our main channel, or secondary channel, is linked down below in the description, where we do 10 to 12 video ideas every single day. And with that all being said, I wish you a green trading week.